Are you interested in finding out about the most recent developments regarding Tesla and its place in the electric vehicle market? In this video, we'll talk about a ton of amazing news that will turn even the most ardent Tesla bear into a full-fledged bull. Get ready to dive right in and learn about Tesla's recent price reductions on the Model S and Model X, the company's plans to lower the cost of its upcoming generation of vehicles, and the effects this will have on its competitors, as well as the company's growth potential and unique technology, like its supercharger network, and its profitability in 2022. As investors debate whether or not to buy Tesla stock, we'll take a closer look at the reasons why enthusiasts continue to be optimistic about the company's future. And remember to give this video a high five. Now let's get going. Notwithstanding a difficult few months and a disappointing investor day in early March, Tesla now looks to have better news. The company reiterated its target of 20 million deliveries by 2023, which would give it a 24% share of the market. This news has delighted Tesla enthusiasts and shareholders. Tesla shares are down by about 1% as the company reduces prices for the Model S and a Model X for the second time this year. Unfortunately, this did not happen. According to a recent Wall Street Journal article, Elon Musk's cost-cutting goals at Tesla placed pressure on the company's electric vehicle competitors. In light of this, GM concerns have been raised over Ford and Volkswagen's attempts to reduce the price of upcoming vehicles. Tesla CEO Elon Musk and other executives have stated that the company intends to use innovative manufacturing techniques in smaller factories to cut the cost of its next generation of vehicles in half. With these changes, the price of a new generation of vehicles could be as low as $25,000 or less. The next generation of vehicles, which many investors were anticipating to see, will not be exhibited until a formal product presentation. Although Tesla has not yet produced a $25,000 vehicle, the business has gradually reduced its production expenses, lowering the price of some automobiles costing hundreds of dollars. Although conventional automakers like Ford and General Motors have recently made millions of dollars on electrification investments, investors doubt they will be able to match Tesla's profitability and cost-effectiveness. Elon Musk, the CEO of Tesla, seems to have a natural capacity to put himself and the entire industry under strain by making incredibly ambitious promises. However, he is aware that even if he only meets half of his goals, it will still significantly alter the market and provide him a significant competitive edge. Recently, Moody's Investor Services gave Tesla a Ba3 rating with a stable outlook. This upgrading indicates Moody's anticipation that Tesla would continue to be one of the leading producers of battery electric vehicles with a growing global footprint and extremely high profitability. The update also takes governance factors into account, such as Tesla's responsible financial practices and management's track record of successful operations. Notably, Tesla has expanded rapidly since the Model 3 was introduced to the electric vehicle market in 2017. According to an annual compliance report, Tesla has been busy increasing production at its gigafactories worldwide. Starting with the opening of a factory in Shanghai and the release of the Model Y, the company is also increasing production at its gigafactories in Berlin and Texas. Tesla recently established its newest U.S. production facility in Travis County, Texas, and reported that the number of employees at its Texas gigafactory tripled in 2022 compared to the previous year. Was a part of a larger increase in the total number of employees across all Tesla locations, which increased by 23% as reported in the filing with the SEC in January. This was true despite a trend of layoffs in the tech industry. By the end of 2022, Tesla had a substantial increase in full-time employees, with 28,565 more working full-time than the previous year. It is anticipated to deliver the Cybertruck and has begun building the Semi. This year, with the proposed construction of a gigafactory in Mexico, Tesla is expected to increase its global footprint once more in terms of ratings. Tesla is categorized as an investment-grade company by Moody's, with a Ba3 rating. Given that Tesla has a Ba3 rating, which places it in the long-term investment-grade category, Moody's considers that its credit risks are mild. In the generic rating category, Tesla's Modifier 3 rating is at the bottom. With its Model S, Model X, Model 3, and Model Y vehicles, Tesla competes in the luxury car and crossover SUV categories. It is a prominent competitor in the battery electric vehicle market and is acknowledged as a leader in the EV business. The company allocates approximately 4% of its sales towards research and development in order to enhance its industry-leading technology and lower production costs. Investors are intrigued by Tesla's potential for growth as more people adopt EVs due to increased demand. As we all know, Tesla has made a name for itself in the automotive industry. The firm expects to sell new cars over the next few years, including a sports car, light truck, semi-truck, and reasonably priced sedan and SUV. Tesla built 2 new factories in 2020-2. Top producer of electric vehicles worldwide. With gigafactories located in Texas, Shanghai, and Berlin, the business has also started manufacturing the Semi, and this year, the Cybertruck is anticipated to be delivered. The proposed gigafactory in Mexico is projected to contribute to the growth of Tesla's global presence. Given that the company is classified as a long-term investment-grade issuer, Moody's Ba3 rating suggests that the company has moderate credit risks. Given that conventional manufacturers are starting to invest significantly in EV development, investors are discussing whether or not Tesla stock is a viable investment. Despite these worries, Tesla may face more competition in the market. The company's EVs, autonomous vehicle batteries, and solar generation systems, according to Tesla enthusiasts, have the potential to upend the automotive and power generation industries. When combined with its unique supercharger network and cutting-edge technology, Tesla offers the best function sector of any EV available on the market. Currently, Tesla stock is trading at a price-to-earnings multiple of 55, which is historically inexpensive for the company, but may be viewed as pricey. With a 32% return on equity and a 37% increase in revenue, investors are paying for quality. Given that Tesla recently announced price reductions on a number of its models, particularly in the Chinese market, this indicates the company's readiness to adapt to heightened competition, which long-term investors are expected to bear rewarded for purchasing Tesla stock at this time as the business increases production, keeps up its position as the industry leader, and the EV market continues to expand. While its forward price-to-earnings multiple of 48 is higher than its traditional rivals, Tesla's profitability for the full year 2022 is noteworthy as the company's operating income doubled to $13.7 billion. This means Tesla has more room to keep prices low, increase its market share, and become less reliant on external financing. Its market cap of $623 billion also puts it ahead of all other American automakers combined. Considering Tesla's potential for expansion as a pure-play electric car maker, this is still feasible. Over time, Tesla's management anticipates that vehicle deliveries would increase at a compound annual growth rate, CAGR, of 50. This could result in significant growth in revenue and profit, even though the price of Tesla shares has increased since the beginning of 2023. Long-term investors may still find value in the company, but some analysts believe that investors may have lost out on the opportunity to purchase the stock at a lower price. Despite increased competition in the electric vehicle market, many analysts still think that Tesla remains the global leader in EVs thanks to its vertical integration, which drives higher margins, and self-driving technology. A long-term investment strategy is essential for sustainable returns in the stock market. With the price of Tesla shares rising, analysts from Jefferies, Bush, Mizuho, RBC Capital Markets, and RBC Capital Markets all kept their buy ratings targets between $200 and $230. Ongoing product improvements should keep the Model 3 and Y expanding in conventional areas, but dynamic pricing may make growth unpredictable overall. These factors, together with Tesla's distinct position in the electric car market, should keep its profitability and growth forecasts stable. This pretty much wraps up our coverage of Tesla news. If this was helpful, please remember to subscribe, give the video a thumbs up, and let us know what you thought. The market justifies its valuation, but some contend that the company may have missed its window of opportunity for a compelling valuation. Either way, we hope you enjoyed it, and we'll see you in the next one.